Good morning, good morning, good morning. Welcome to today's Morning Blast with myself and Mr. Michael Brown. It is Tuesday, the 11th of March. And before we crack on, I better get the legals out the way. Nothing discussed on this spaces session constitutes trading or investment advice or infers any kind of endorsement by PIQ Limited, Limited, James PIQ or PIQ Suite, or indeed that of the hosts, which, as you know by now, is Mr. Michael Brown and myself, Mr. Ryan Paisley. Good morning and happy Tuesday to you, Mr. Michael Brown.
Very good morning, Ryan. Very good morning to everyone else. You sound considerably fresher and more vitality about you than you did this time yesterday, mate.
The vitality is seeping out of me.
Oh, God. Jesus Christ.
Have you got aircon today?
I do, yes. I'm no longer working from a third world country. I have air conditioning. I have Wi-Fi. I've even got running water this morning.
Wow. May it last for a long time.
Oh, mate, living the high life here.
What happened yesterday? Please tell me.
Oh, what happened yesterday? It was fucking carnage yesterday, is one way to put it. It was another pretty grim day in the equity space. The sell-off and de-risking that we've seen over the last 3 weeks, rumbling on into the fresh trading week, despite there being a lack of fresh news flow, impactful news flow at least, or external catalysts to significantly move the needle. Clearly, jitters over the state of the US economy and also the elevated degree of policy uncertainty with which the Trump administration are operating, continuing to pressure sentiment in a very, very significant way indeed. As such, the S&P 500 ended yesterday down by 2.7%, although we did have a bit of a late day rally. We were down by well over 3% going into the last hour of trade, but the late day gains were not enough to prevent the S&P 500 from closing below its 200-day moving average for the first time since November of 2023. And of course, frequent listeners to this program will know that the 200-day moving average is probably about the only technical indicator that both myself and Ryan believe holds much credence. And as the old phrase goes, nothing good happens below the 200-day moving average. Of course, the tech sector continuing to bear the brunt of the declines, the Nasdaq 100 ending yesterday down by 3.8%, although we were down by almost 5% on an intraday basis. Nevertheless, that was the tech-heavy index's worst day since all the way back in September of 2022. It is just worth mentioning that we saw a further decline in both front Nasdaq and front S&P futures during the Asia session, both of which were trading down by well over 1%. During the middle of that session. They have since recovered losses, with both now trading with very marginal gains on the day, but nonetheless it does seem that the market remains in the mood to fade strength and to sell rallies as opposed to buying the dip at this moment in time. Unsurprisingly, we saw a very defensive bias to trade elsewhere, with treasuries acting as a haven once more. The 2-year yield falling 9 basis points on the day yesterday, testing 3.9% to the downside and dipping below that level this morning, while the 10-year yield fell 8 basis points and this morning trades just below 4.2%. In terms of markets elsewhere, the FX space was surprisingly quiet yesterday, actually, given the tumultuous trade that we saw elsewhere, though this morning we have seen the dollar continuing to roll over, with the dollar index back below 103.5 and all other G10s gaining ground, with cable reclaiming the 129 handle and euro dollar moving north of 109, which puts Ryan buying me lunch within touching distance at this moment in time. One of the reasons why we have seen that demand in the euro in early trade is a result of some shenanigans that have been going on in Germany. We had news via Bloomberg yesterday that the Green Party in Germany would not be supporting the draft debt package that has been put together by incoming Chancellor Friedrich Merz. Of course, this is the 500 billion euro special defence fund. And if the Greens weren't to support that, then it would deny the two-thirds majority that is necessary to get the constitutional amendment passed in order to unlock all of that spending. I don't want to say this is disingenuous reporting, but it's not the best headline writing, if I'm going to be kind, because we did see the euro take a leg lower on those remarks, and then it was revealed that actually what the Greens has said is we're not going to support it in the form that it currently is, and we're going to put forward our own proposal instead. And in fact, this morning the Green Party have put forward that proposal, and the leader has come out and said they are hopeful of a defence deal this week. So it seems like a little bit of political grandstanding going on here from the Green Party. The defence spending is still likely to go ahead, and in true EU fashion, they will somehow fudge it to make some nonsensical climate commitment that gets the Greens off their back. Nevertheless, it did cause a bit of a wobble in the euro, but we seem to have moved past that at this moment. If I was again being uncharitable, I'd say someone needs to go and check the trading statements of the Green Party leader and see how short the euro they were yesterday. But that will leave that for another day. In terms of other bits and bobs that were going on yesterday, as I said, catalysts relatively light, although we did have some reporting that President Trump and President Xi may be meeting in China. The South China Morning Post initially reported that this meeting could come as soon as April, and then that reporting was followed up by the Wall Street Journal later on in the day, who noted that that summit could come in June, but the talks are still at an early stage. I think if we've learned anything from what is now effectively 5 years of dealing with Trump, these things kind of tend to come together at the last minute, and even if they're in the diary, they can very quickly be removed from the diary. So I wouldn't get your hopes up on that one until Trump's Air Force One actually lands in Beijing, if indeed that is going to happen. Sticking with the United States, for the tech-focused folk out there, Apple, they are apparently going to be doing a major software overhaul for iPhone, iPad, and Mac, which is great because I still struggle to use the iPhone with this software. I don't need to change it. Nevertheless, apparently the aim of all of this is to make their operating systems more consistent across devices and simplify navigation. This is planned to debut at their WWDC conference in June. According to Bloomberg, this will be the most significant upgrade to the Mac since 2020 and the most significant upgrade to the iPhone since 2013. So great, I guess. And a couple of things to note here in the UK. The first is that a whole host of investors, this is according to Financial News, have approached the London Stock Exchange Group trying to buy AIM. AIM, of course, being the alternative investment market, which has just been absolutely smashed as a result of Rachel Reeves deciding to cut a whole host of tax relief. Effectively, this group of investors are looking to relaunch AIM as opposed to it being very UK focused. They want it to be an exchange for global startups and growth stocks. So good luck to them, I guess. And sadly, I have to end with a bit of bad news this morning, particularly for any UK macro focused folk out there. The ONS yesterday confirmed that they will be continuing, after a consultation, they will be continuing to release economic data at 7 o'clock in the morning, which is probably about the worst bit of news they could have given us. I mean, quite why the ONS think it's logical to release what is undoubtedly market-moving data at a time when, firstly, the gilt market is closed, the equity market is closed, stores are closed. Basically, the only thing trading is the pound, and liquidity is utterly dire. And this is a lot who are supposedly caring about market stability, which gives you an idea of how much they do actually care about that. And of course, this is the same ONS who actually yesterday the FT were reporting we finally got a little bit of clarity on how ropey the labour market data is. At one point in 2023, when they finally decided to can the labour force survey, one question in the labour force survey, out of a population of about 70 million, it was responded to by 5 people, which gives you an idea of how utterly dire those statistics have become recently. So, not the best day for the ONS yesterday, but when is it, I guess?
Yeah, pretty much. Well, thank you for that, Mr. Michael Brown. So, as usual, a few headlines from our good friend Zach from the Overnight News Roundup. So, starting off in macro and policy, Trump's reciprocal tariff warnings. President responded to Ontario's 25% electricity surcharge by threatening to recoup costs on April the 2nd, specifically targeting Canada's cars, lumber, and energy. That's via Truth Social. US-China trade talks have apparently stalled. Discussions remain at lower levels. Both sides are talking past each other, apparently, quote, without concrete progress. Hedge fund de-risking, funds unwound single stock positions on Friday in the largest move in over 2 years, on par with March 2020. Investors are increasingly believe that President Trump may tolerate a deeper stock sell-off, weakening the market's restraint policy. That's the narrative according to the FT. Recession risks and market views. JP Morgan raised US recession odds for 2025 to 40%, up from 30% previously.
Sorry.
What?
I just need to jump in there because I can see he's listening and I know he'll be giggling about that. What JP Morgan have done there is sign up to one of Dario Perkins' rules of the sell side. You see, when you want to stick your neck out a bit, but you don't want to look like a complete moron, you just say there's a 40% chance. Easy.
Exactly. Like I said, 40% chance of parity for the euro.
Very good.
Well, the Citi cuts recommendation on US stocks amid recession worries, upgrades China. Germany's defense deal, Michael just covered that. Yeah, so the Greens see a possible agreement on defense spending reforms this week, although they differ with MERS on GDP exemptions. Japan and tariffs. Revised data shows that Japan's Q4 GDP grew more slowly than initially reported, but still likely supports additional BOJ rate hikes. Japan's trade minister failed to secure an exemption from US tariffs on steel and aluminium. That was 25% from Wednesday. That's tomorrow.
Well, it might not be tomorrow with Trump, to be fair. God knows.
To be fair, exactly. Is one tweet away from being either double that or non-existent. The economy minister pledges close coordination with the BOJ to hit 2% inflation. In other macro highlights, UK in-store sales rose modestly in February, but big ticket spending remains subdued. Australia consumer confidence up in March amid easing inflation and interest rate cuts. Argentina, President Milei has pre-approved an IMF loan nearing a key economic deal. Geopolitics now. US support for Ukraine. Secretary of State Rubio says Washington may restart intel and military support if Tuesday's high-level talks with Kyiv show progress on a peace process. On domestic mineral refining, President Trump reportedly plans to build metals refining facilities on Pentagon bases to boost US critical mineral output. An executive order could drop as soon as Wednesday. On EU-UK defence cooperation, 20 EU capitals urge concrete defence ties with the UK, including industry collaboration and potential joint exercises. And regarding NATO, the Secretary General over there privately encourages EU leaders to mend ties with Turkey, given shifting geopolitics. On Hamas and US talks, Trump's hostage envoy indicates Hamas may lay down arms for a truce, acknowledging US interests differ from Israel.
Sorry, that's not an envoy that he's taken hostage, is it?
Oh, I do hope not.
What a job title that is.
Oh, God. Sparking frustration among Israeli officials. Taiwan's anti-dumping probes. Taipei launched investigations into Chinese beer and certain steel products, expanding global scrutiny of Chinese exports. US-Ukraine, minerals. TechMet, backed by US, wants to develop a major lithium project in Ukraine, potentially under the near-finalized US-Ukraine minerals deal. Just a few corporate highlights. AI chip competition. NVIDIA faces rivals focusing on inference workloads such as Cerebras and Grok, highlighting a shift towards deploying AI models at scale. Tesla, Trump said he'll buy a new Tesla to support Elon Musk. I'm sure that'll go a long way. As shares face pressure from a Tesla takedown movement, Musk responds that Tesla's long-term prospects will be fine. What else we got on this one? Volkswagen beat revenue and profit estimates last year, sees future growth, further growth in 2025, emphasizing cost cuts. Remind me, Michael, we heard much more on what's going on with the cutting of factories and all that. It seems to have gone a bit dead on that front, but from last time I remember, there was no kind of concrete deals out there. But so as far as I gather, they're still looking to cut some production and staffing levels in Europe. And DeepSeek founder, the Chinese AI pioneer, refuses outside investment to maintain his science project ethos despite global acclaim for the system. And that's it from me. Back to you in the studio.
Good stuff. Thank you, Ryan. Just a very quick one, actually, just to add to what you were saying about tech names. I know it's a bit of a running joke that neither you or I have half an idea what any of these tech stocks actually do. I thought JPM, their TMT trading desk, they had a decent comment. It was actually out last night. I sent it out earlier on. And the comment was, it's hard for a long-only fund to justify owning a 50 or 75 basis point position when, quote unquote, vibes is no longer a credible investment thesis and you can't actually comfortably explain what the company does. And I think that's quite a big issue for a lot of these tech
Yeah,
stocks where it's just kind of gone, well, you seem to do something with AI, so we'll just all pile in. And then when you've got someone tapping you on the shoulder going, go line by line through your holdings, tell us what you're doing, it suddenly becomes very, very difficult to justify those positions and explain
yeah.
some of the unwind that we've seen.
Wait, you know what? Coincidentally, that's the tweet I put up in the Spaces Jumbotron just now. And
Ah,
absolutely right. It's similar to like that Palantir. No one has a clue what they do, but yeah, they're on a hell of a run. Well, up until recently, but yeah.
there's
Who was
probably
that?
there's probably steam coming out of Tom Talk's car's head right now,
Yeah,
but
absolutely. But who was that guy a couple of years back? Mike Minaveri or something like that. There was
oh
an
yeah,
interview with CNBC, and it's like, okay, well, tell us what this company does. You're really bullish, and he's
the line's breaking up.
line out, line out. Oh,
So
completely.
I can't remember who it was now, but someone rather once uncharitably said that I looked a bit like him, which annoyed me.
Oh, yeah, that's a bit harsh.
Yeah,
Definitely more of a Venusian.
I'll
Anyway,
take that one. We've gone totally off on a tangent. Let's try and get things back on track a little bit. In terms of today, the calendar of scheduled events is a relatively light and sparsely populated one once more. At 2 o'clock this afternoon, of course, the US, New York, London time difference is 4 hours. So at 2 o'clock this afternoon, we do have the latest JOLTS job openings data out of the States. That figure is January data and is expected at 7.63 million, up from a prior 7.6 million. It is worth bearing in mind that although the data is a little bit out of date, markets do remain very, very sensitive to incoming US releases, particularly those that surprise to the downside. So if that figure is rather pessimistic, then it could give stocks a bit of a jolt once more to the downside. In terms of other bits and bobs today, we do have US supply. A 3-year note auction coming up at 5 o'clock this afternoon. That's $58 billion worth, and it comes ahead of a 10-year auction on Wednesday and a 30-year sale, which comes on Thursday. In terms of other bits and bobs, of course, the Fed in the pre-meeting blackout period, so we won't be hearing from them. The ECB's Ollie Rehn is the only notable speaker on the docket, and there are no real earnings of any particular significance either before the open or after the close. But of course, the other thing to bear in mind is I'm sure Trump will pop up at some point, and there will be particular focus, as we were just alluding to the issue of steel and aluminium tariffs, which are due to go into effect at midnight today, I believe it is. But all bets are off as to whether or not that actually happens, I guess, given how things are working at the moment.
Exactly that. Exactly that. Well, Mr. Mike Brown, thank you so much as always.
Pleasure.
Hopefully we've got it's quite a quiet week all week this week, isn't it? In terms of data and stuff.
Oh, don't use that word, but yes, it is.
In terms of data,
It is, yeah. It's really only the CPI figures on Wednesday, tomorrow, of course, and that's pretty much
yeah.
it in terms of notable data releases. But yeah, given I think markets have got enough other catalysts to be
Well,
feeding
exactly
off at
right.
the moment.
And also it's Cheltenham this week, so it gives people a chance to waste their money on the nags rather than stocks. But anyway, I digress.
Well, some
Mr.
people
Mike
pick a
Brown,
donkey no matter what market it is.
Thank you very much, Mr. Mike Brown. Listeners, thank you as always for tuning in. We'll see you all tomorrow. Bye bye.